Good afternoon, hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. Well, it has been, what a week it has been. Nifty has notched about its 8th winning streak itself, and the Sensex has also extended the gains for the 5th trading day itself. Nifty above that 25,100 mark, and Sensex has also closed with about 300 points gain. For the week itself, both the benchmark indices are up by about 1%, notching second weekly close in the green itself. India VIX has also continued to cool off today, showing that the market stability is quite intact, and sectorally, financials, IT and auto, that is what led the market rally as well. Nifty Metal Index also saw some good momentum ahead of the Fed meet due next week. So the likes of Tata Steel, Hindustan Zinc, Vedanta, Hindalco, all of them did well on the back of that as well. Then, of course, we did have defense stocks also emerging as the market flavor on the back of renewed optimism and some heavy flows and volumes and new order wins. That's what kept a majority of the defense stocks in the momentum in today's trading session as well. But if you look at for the week, sectorally, Nifty Auto Index, that was the top performer following automakers cutting down PV model prices as well following the GST reforms, and followed by PSU banks and IT also did well on the back of Infosys share buyback news itself. But yes, on the flip side, FMCG and Realty, these were the two indices which took a backseat, and they emerged as the top sectoral laggards this week itself. But yes, the week was filled with automakers cutting PV model prices in response to the GST reforms. Then we had the social media exchange between Prime Minister Modi and US President Donald Trump, which showcased that there could be some progress in the trade talks in the coming days itself, followed by today's soft US inflation report and Infosys share buyback. So all in all, that's what led to the market rally this week. And now to understand how this market fared and how you should position yourself in the next week itself, joining me is technical analyst Nirav Chheda of Nirmal Bank. Nirav, good afternoon. You know, Nifty above that 25,100 mark, 8 days of back-to-back gains. What's the next level that we need to watch out for the coming week?
Yeah, hi Lovisha, thanks for having me. See, on the Nifty front, it's a very good close. Basically, the 25,000 level was a very important pain point or the resistance area with the highest call base around this 25,000 levels, which has been closed above on a weekly closing basis. Now, this is a good sign. I believe now Nifty has the legs to move up towards that 25,500, 26,000 odd levels now in the coming days or probably in the next week itself. So I do believe, it's a good time to start buying Nifty, even Bank Nifty for that matter. See, Bank Nifty was the laggard. It had broken the 55,000 levels, went up to 53,800 odd, and now has since seen a good reversal. So I believe a lot of short covering action has been seen in Bank Nifty and the stocks as well. So this is one sector which can probably take the lead from here and go up toward that 56,000 levels very soon. So I believe, yeah, Nifty and Bank Nifty both should be bought. Nifty stop loss should be around 25,100 on the futures, and 25,500 is the target that I am looking for at least in the first couple of days of the next week. While for Bank Nifty, I do believe 54,400 to be a good support area, and I believe 56,000 is going to come in the offing. It might just take 4 or 5 days, but yes, be long on Bank Nifty as well.
Be wrong on Bank Nifty as well. But let's quickly take the one stock in focus. That was your Infosys buyback. That was the big news of today itself. 18,000 crore rupees buyback, and brokerages believe that it can technically support the stock in the near term given the underperformance the counter has seen. Nirav, how do you view today's sentiment, and what can we expect the upcoming sessions to look like for Infosys and of course for the entire IT pack?
Uh, See, Infosys, if you see the last, 3, 4 years data, very important or very strong support has been 1400 for this stock. Every time it comes there, it witnesses a rebound and, it goes up towards that 1800 odd levels. And I do believe this is what is going to happen for this stock again. It hit almost the 1400 levels, and I believe now it is all set to move up at least for the first target of 1650 and then post that 1800 odd. So yes, I'll be long here. Very good close on a weekly closing closing basis as well. Volumes were good. Most of the indicators have turned positive. So I believe yes, one can look to buy Infosys if you're already holding. Your stop loss should be 1480. For new fresh buying as well, the same stop loss, and your first target would be around 1650 odd.
Okay, all right. Those are the levels that we need to watch out for the for emphasis as well. But let's also touch base on auto stocks because that saw a little bit of a profit booking, in the later part of the week, but still ended the week with about good gains itself. September 22nd, that is the date when the GST reforms gets kicked in, and everyone who is hoping for a good Diwali. But yes, from the auto space, Nirav, what are you liking from the space? Majority of the automakers have also, discounted and cut the models across the passenger vehicles.
A lot of stocks look good actually in the auto space. In
Hmm.
fact, one of my recommendations for today, Tata Motors is in the same space. There has been a breakout there, but not only Tata Motors, there are a lot of stocks which are doing well. No doubt they've come down in for the last couple of days, but I do believe structurally they have witnessed a breakout, and they should again, witness good buying going forward. So the likes of M&M, Maruti, Hero Motor, Ashok Leyland, all of these stocks can do well. So yeah, for today, I really like. I mean, for the next couple of days, I do like Tata Motors, and this is one stock that you can buy fresh because there has been a breakout on the closing, and you can keep a stop loss of around 700 and look to buy the stock with that target of around 760 odd. It can probably go even higher, but yeah, it's a very good closing for this stock. It hasn't moved up as much as the others, so it is now the right time for this stock to outperform the others in the coming week.
Hmm. Okay, all right. Those are the stocks that we need to watch out for and expected to outperform in the coming week as well. Let's also talk about certain indices which did not do well this week. That was your Nifty Realty Index, continues to remain in the consolidation zone and, of course, the snooze mode. Nirav, do you expect the rate cut talks from the Fed meet next week would turn things around for a rate sensitive sector like this?
Uh, Very difficult to say. See, this index as a whole has remained in consolidation for quite some time. It is making a lot of lower bottom formation, and it can probably come down towards that 825 odd levels, the realty index. Yeah, it is right now at around 884. So there are chances that it can come down. I don't see any green shoots here at this point of time. Even in the stocks, if you see, take DLF, Godrej Properties, and some of the larger ones, I don't see anyone really breaking out, and that is why I believe this should largely underperform the markets at this point of time, at least for the coming week or so. But as the reversal comes in, volumes come in, breakout come in, that is when you look to again add positions here. But for now, one should concentrate on other sectors, like the banking sector or the auto or the IT sector, which can probably outperform the real estate sector.
Hmm. Auto and IT instead of realty at this point of time. Let's also talk about Nifty FMCG because that also ended the week with about cuts. Given how Street has been quite bullish and vocal about the consumption sector, Neva, how do you forecast the upcoming sessions to pan out? Because this week has been a week for profit booking for FMCG.
Uh, See, no doubt there has been some profit booking here, but I believe this whole index has remained in consolidation for so long, and the stocks they have actually witnessed a good run up before the week. So there was likelihood that some selling would come in, but they're still structurally very well placed, and the likelihood of buying coming in is very high again for the next week. So I would probably look to buy even FMCG from a trading perspective, where the likes of HUL, Nestle, Marico would probably outperform going into the next week. So yeah, one can continue to hold on to FMCG as a pack. I don't see any problem in this index as a whole. Also, from an index point of view, this index is on the inflection point where a breakout of 57 150 will lead to, much higher levels in this index. So I would suggest to, go long in this index. Once this breakout comes in, it can probably look to, come to around 60,000 odd levels post the breakout.
Okay, all right. At an inflection point, that's what you're mentioning for the Nifty FMCG index also. We'll watch out in the upcoming sessions given how the GST rationalization has been taken place also, and of course the two slab rates that the FM has tabled out. Let's now shift focus to the defense stocks because that did well this week. Nifty Defense Index up about 4%. Plenty of stocks like Garden Reach, BEML, Bharat Dynamics, all of them gained traction in today's trading session as well. How do you position yourself? How do you place yourself across the defense theme, Nirav? Can we expect more legs to this rally to continue?
Oh yeah, so this is one sector which everyone looks out for now, at least in the last 2 years. And this had been underperforming for quite some time now. Today's move, most of the move has come today, and today's move has seen, the whole sector actually bottoming out and witnessing a breakout, most of it. So definitely look to buy, certain stocks in this space. I really like Cochin. After a very good consolidation in between, 2,500 to about 1,800, 1,700 odd levels, this has broken out. So good close. Also, it has space to move up from here. It can come up toward that 2,000 odd levels, at least from a near-term point of view. So you can look to buy the stock with that target, and 1680 is the stop loss that you can keep. Also, a little smaller stock like a Premier Explosives. This stock also looks really good. It's been a huge consolidation for this stock in the last 1 year or so. Finally, it has broken out above the 550 odd levels, closing above the same. And I believe now it is ready to move up towards the 620 odd levels. You can look to add this stock in the portfolio, near-term portfolio, and you can keep a stop loss of around 540 odd for this stock.
Okay, Premier Explosives, that's one stock that we'll be watching out for as well. Let's also touch base on railway stocks now that we have mentioned about defense because they also did well on the back of multiple order wins. Do you believe that this is just a temporary news-based rally or can we finally see a pickup in majority of these counters like RVNL, Titagar Wagons, and then we have, Realtel on the back of this?
Uh, See, they've still not witnessed breakouts. That is a problem. For defense, you've seen some of the stocks after a huge consolidation, the breakouts have come in. No doubt these stocks, the railway stocks have come up, but the breakouts are still, missing. Probably they'll come in the next week, but as of now, the breakouts are not here, and that is why I'll not be buying. Just in case you want to trade into something, as IRCTC is one stock which has come down from 1,000 odd to about 720, and it is near the demand zone where it had bounced up from. So this is one stock which can probably do well, but again, a huge resistance area for this stock is around 760 and 780. Once that is crossed above, that is when you'll see a big move coming in. Until then, from a trading perspective, this is one stock that you can probably trade on the long side with a stop loss of around 700.
Okay, all right, 700. Let's also talk about two very positive brokerage notes that came in for the pipe sector. First, we did see UBS coming out with a note this week, and then we had JP Morgan, where they have initiated coverage on Astral and Supreme Industries. What the brokerage believes is the sector is approaching a demand recovery inflection point, and a turnaround could be possible in the second quarter itself with a margin recovery which is expected to take place. Nirav, how do you see the pipe sector? Anything that you like from the space?
Uh, Most of the stocks have witnessed a lot of selling pressure. So just from the price perspective, the stocks are near the bottom. Now don't see much selling coming in from the levels where they are there at this point of time. So yeah, just from the price perspective, I do feel the stocks are actually now bottoming out, and they can come up, but they need volumes to actually witness a breakout. So the breakout hasn't come in, but yes, from a price perspective, you can probably look to add these stocks slowly in your longer term portfolio. But from a trading point of view, I don't think, much movement will come in the next couple of weeks as well. But yeah, if I have to choose, a stock, Prince Pipe is one stock that I would choose. Why? Because, after a 4 or 5 year downturn, from 800 odd levels, this stock has witnessed a reversal, and the breakout is slated to come in above the 375 levels. But in all likelihood, that will come in because the volumes are picking up. So yeah, once that comes in, you will witness a huge rally in this stock. But until then, you can buy with a stop loss of around 315 for that target of around 375.
Okay, all right. Let's talk about another stock in focus, that is your Bajaj Finance. The stock is seeing, 13 straight day of gains, 14% uptick on the counter itself on the back of the GST rationalization measure. And of course, given that consumer durables is expected to be the biggest beneficiary out of the GST reforms, Bajaj Finance, given its large portfolio in consumer durables lender, is seeing a lot of traction itself. Bajaj Finance, anything that you're watching out for in the from the levels perspective, Nirav?
See, there is a clear breakout of a flag formation in this stock, and it has closed at the highest level. Also above the 1000 levels. I believe the next real target for this stock is around 1120, 1150 odd levels. So that is where it can probably hit and then consolidate. So you can still look to buy the stock at current levels, and on some declines, 950 will be the stop loss.
Okay, all right. All right, just one last question before we let you go, Nirav. Any picks, anything that you're highlighting for, at least for the next week for our viewers?
Yeah, so one is Tata Motors. I like this stock a lot. You can buy this stock with a target of around 760 odd. Your stop loss would be 700. The second one that I really like is Granules. So pharma, some stocks are up, some are down. Granules, after a long time of breakout, has come in. It has closed at a very good level. I believe this stock can move up from here up to the 565, 570 odd levels. So with the target of around 570, you can look to add positions on the long side in Granules with a stop loss of around 515.
Okay, all right, all right. With that, we have to let you go, Nirav. But thank you so much for your time and connecting with us.
Thank you.
All right, for this week, we have ended on a very positive note. Plenty of cues that will be watching out for next week itself. We have the Federal Reserve meeting next week, 16 to 17. Those are the dates when the Federal Reserve will be announcing its policy path as well. But yes, let me also introduce you to Moneycontrol Super Pro, which can also be your ultimate investment superpower. You can get all the live calls, trading and investment ideas from semi-registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro is where the serious investors can stay ahead, and you can download the Moneycontrol app and subscribe to Super Pro today itself. All right, with that, we've come to an end of this edition of Closing Bell. In just some time, we'll also be getting the inflation report for India, and of course, the SEBI board meeting, which is also due today itself. We'll be keeping a track of all of this and tune back to markets next week. Until then, have a good weekend, and thank you for watching.